Hello everybody, good evening. Welcome to CAIIB English Medium channel. I hope all of you are doing fine. Today in this particular session, we will be talking about Indian economy and Indian financial system. As you know, the exam is scheduled on 3rd of May and right now we are left with limited time. So what should be our strategy? The strategy should be to focus on the most important modules and in that also most important concepts, and that is what we are covering under this particular series of your JAIIB May 2026. So when you talk about module D, right now we are done with unit number 29th till unit number 37th, and today we will be covering the unit 38th, that is venture capital. So when we talk about venture capital, what do we mean by a capital? Capital simply means that you have certain amount of money with you which you will be providing for the investment, fine, for the investment purpose. Where do we invest? When we talk about this capital, alone the capital can be invested in any type of business, but for venture capital we are investing in the new businesses, the fresh businesses, or for that matter the startups as we call them. So in this entire unit we will be learning about a few topics which are the most important ones when it comes to the examination. Let me be very clear with all of you, from venture capital you won't find many questions, fine, only roughly around 2 to 3 questions you can expect in the actual exam, because the number of topics are very much lesser. So it starts with the concept of venture capital. How do we define the term that is your venture capital? The definition we will be looking into the first topic. After that comes the evolution of your venture capital in India. So more or less India has a good amount of investments only after the new economic policy, the NEP of 1991-92. Only after the introduction of various measures under the NEP 91-92, you will find that the investment has risen in our country. But it does not mean, or it does not replicate the direct investment in the startups alone, which is the major highlight of your venture capital. Then comes the characteristics of your venture capital finance. Who will be financing? Who will require this money? Requirement is from which side? And when we talk about the overall explanation, that what all entails to this process, the explanation is also very, very important. So the process, how this venture capital finance is started and how it is being implemented, or for that matter provided to the required party, everything you will be learning via the characteristics, because ultimately how the venture capitalists they differ from the other capitalists, that is the main agenda. Then comes the financing stages. There are various stages via which you will be financing. It's not that 100% finance you will be giving upfront, since we are talking about what? We are talking about the startups, and in the startups you don't know that whether the startups will last long or not, whether these startups will be able to sustain for a longer period of time. So initially you will be providing some amount of funds, and ultimately on the basis of their performance you will be providing good amount of funding. And when we talk about the process of venture capital financing, how the process happens, fine, the cycle of funding, that will be learning in the process of venture capital financing. So when we say stages of venture capital and process of venture capital, you can club these topics together and study in a single discussion. Then comes the regulatory framework, very, very important. So whenever there is a regulator involved, you will find that certain rules, regulations, stipulations will be there, and same goes for your VCF also. When we talk about the abbreviations, mostly in the exam also you will find VCF instead of venture capital. What is VCF? It is simply the venture capital fund. Then comes the modes of venture capital financing, how you will be financing this particular business. Let's suppose you want to finance a particular startup, then what all modes are available in front of you to finance that particular entity. Advantages, disadvantages of the VCF. Again, VCF very, very important. Ultimately, you have to know that whether it is a hit project or for that matter it has some negative connotation for the capitalists also as well as for the startups. Lastly, if the venture capitalists, they are not at all interested in funding further a particular business entity, then whether we have some exit route or not, all those exit routes will be studying in the last topic. Okay, so indeed a very small chapter as compared to the other discussions which we had in the past. That is the reason why we will be having short discussion here as well. So first thing first, we will try to define your venture capital. The definition is very, very important. And in the venture capital, you must know that what all pertains to a venture capitalist, because ultimately capital, everybody knows that we want investment, we are doing investment. But whether you can do it for any type of business, or for that matter some specific businesses are those which you are targeting. So venture capital, it is just a private institutional investment made to startup companies at early stage, that too at early stage, not when they have become the big companies, or for that matter as we call them, the unicorns. Fine. Venture capital funds, they are the investments made by the investors who seek private equity stakes in small to medium business which have the potential to grow. So two keywords are here. One, when you talk about the type of investment, it is buying the equity. Fine, you hold certain equity shares of that startup which has what, the potential. So these two keywords are very, very important. While defining the venture capital, you will be saying that we want what, the equity shares only, and in case of equity shares, whether we are in the hunt of equity shares for every type of company? No. Every type of startup? No. Only those startups which are having the potential of growth. And when we talk about this potential of growth, we have seen once that in the sunrise sector, if we have to link the module A with module D, in the sunrise sector also somewhere down the line we were discussing the same thing, not about the investment but the potential I am talking about. So in sunrise sector, let's try to revise this topic also. What do we mean by sunrise sector? It is a sector which right now is in its infancy. Fine, it is growing right now, the sector is growing right now, but in future it has the potential to grow. Fine, we see good potential of growth in these sectors. Fine. What are the examples? Anybody who can tell me the examples of sunrise sector? Do let me know in the comment section. Then we have the investments. They are generally high risk, high return opportunities, because we are talking about equity. And in the financial markets discussion also, the initial chapter 29th, we have seen that equities are highly risky. On the other hand, we have the fixed income market. But when you talk about the risk involved, same goes for the return as well. High risk, high return market. The ventures involve risk in expectation of the sizable gain. You want to invest more. Why? Because you see the potential in the company and ultimately you want to maximize your profit. The people who invest this money become the financial partners and they are known as venture capitalists. So Reliance Industries will be termed as venture capitalist for any startup which they are funding. Venture capital, it is the most suitable option for funding capital for companies which are startups with little or no track of record. When we talk about record of performance, no track record is there for the performance, and ultimately only going through your plan, the venture capitalist will judge whether you have the potential or not for the growth. Now let's try to break this venture capital topic further into various parts. So when you talk about the definition, the exact definition, the verbatim definition which you have to know, from here in the previous slide you must have gotten the idea that how we define venture capital. But what is the exact definition? We are concerned with that. It may be broadly defined as long-term investment in business which has potential for significant growth and financial returns. So simply stated, you are doing what? Investment, but that too long term. We are not here to stay for a short term. No, the venture capitalists, they remain with the startups for a longer period of time, because if you see the growth potential, you have to give the startups the time as well. So long term investment in the business which has potential for significant growth and financial returns, usually provided in the form of equity, apart from the conditional loans and conventional loans also. So if the question is there that whether the venture capitalists, they enter only into the equity shares, only into the setup where the equity will be involved, answer is no. Not only equity, but also some sizable loans are also provided. Okay, so loans, be it the conditional loan based on certain conditions, that if you make this much profit, then we will be giving you concession of, let's suppose, 1% or 2% like that, or for that matter conventional loans having a fixed rate of interest. Venture capitalists, they are thus not the financiers only, but also bear the risk as well, and that is the highlight of your difference between a venture capitalist and a lender. Fine. How the venture capitalists are different from the lender? The lender just lends the money and they are only concerned with the recovery. But here venture capitalists, because they hold certain shares of the startups, they also want that this startup should succeed. So when we talk about the risk involved, it more or less is being replicated by the venture capitalists as well. So also bear the risk as well. This return from the enterprise depends upon the extent of success achieved by them. Now, why we are studying this topic in our module D, or for that matter financial markets? Because in India, when you talk about the startup ecosystem, it is still in its infancy. It has not developed that much, and that is the reason why we must know about this concept of venture capitalist or the venture capital. The most distinguishing feature of venture capital is that it meets the need of a business wherein the probability of loss is quite high because of the uncertainties associated with the business, but the returns expected are also higher than the normal. Okay, so when you talk about the returns, they are not that high in some scenarios. So whether they are high or not, that will depend upon the success of the company, success of the startup, and the venture capitalists, they know this thing that the returns can be high and they can be normal as well, but they take this risk based on the potential of growth of your startup. The entrepreneur intends to enter into an untrodden field, some kind of sectors where nobody has earlier started any business. No business venture is present in that particular domain. Like we had Ola, fine, the Uber cab services, they are well known abroad also, but Indian version was not present. So that's the reason why we came up with Ola, and that is what? A startup only. The venture capitalists invest in the business where uncertainties are yet to be qualified into risks. Right now there are uncertainties whether the business will work out or not, business model will work out or not. But ultimately what happens? If there is profit, then definitely the venture capitalists will stay. It is therefore termed as high risk and high return capital. So the keyword which we have to remember whenever we are discussing about the venture capital is that it is a highly risky form of investment, although long term, but yes, it involves good amount of risk. But if they have good amount of profit also, then returns are also high. Now let's move on to the important topic, that is evolution of your venture capitalism in India. How the venture capital has evolved in our country. So when we talk about some parameters where we will be having the definition of venture capital, then you will find that some of these stages we have not qualified whatsoever. Fine. So whenever there is a stringent rule, stringent regulation or stringent definition you are looking into, then you won't find the direct example in our country. But how the evolution has occurred for the venture capitalism, that we can state via the Bhatt Committee. So it was the Bhatt Committee, Committee on Development of Small and Medium Enterprises in the year 1972, which recommended the creation of venture capital in India. So prior to 1972, whether there was any example or not, there will be examples, right? There will be certain examples pertaining to the startups which are being funded by the venture capitalists in our country, but we don't have them documented, right? And after 72 only you will find the institutionalized mechanism for venture capital started in our country. The Bhatt Committee urged the need for providing such capital to help new entrepreneurs and technologists in setting up the industries. So when we talk about setting up the industries, what kind of industries? Mostly the IT industries, right? International information technology is to be set up in our country. That was the motto initially in the 70s, 80s, and followed by the new economic policy of 91. So when you talk about some of the venture capital funds which have been established, they are as follows. Various types of VCFs have been established in our country since the recommendation of Bhatt Committee in 1972. So after 72 you will find that there is a brief history of various VCFs. Let's try to analyze each of them one by one. First of all, there is RCF, Risk Capital Foundation. Then we had the Seed Capital Scheme, SCS. Then there will be some venture capital schemes also. Ultimately, when we talk about the venture capital schemes, they will have some more types of organizations setting up the venture capital scheme. The individual organizations will also be there. Then we have PACT, a very important you can say program for application of commercial technology. Then we have the government funding also. So all these are what? These are some of the institutionalized venture capital funds which you will find in our country. After that, TDICI is there, RCTFC, and many more are there. But for our exam, we will be having a discussion around only these. So yes, first of all, let's see what was this RCF. So it was established by the IFSC, so Industrial Finance Corporation of India. We have seen IFSC as one of the prominent or the first DFI. What do we mean by DFI? We have seen that in your module C. The DFIs, they are what? Development Financial Institutions, and the prominent one was IFSC itself. And that time only, 72 only, you will find the establishment, or for that matter more institutionalized framework for IFSC was also set up, and ultimately IFSC launched the first venture capital fund in the year 1975. So note it down, this is highly important. You will find one question based on this particular information of 0.5 marker. The fund Risk Capital Foundation aimed at supplementing promoters' equity with a view to encouraging the technologies and professionals to promote new industries. So when we talk about promoting the new industries, it's not only about any kind of industry. No, we are only talking about the startups which has the potential, because ultimately venture capital talks about the high risk, high return. Seed Capital Scheme, again this type of VCF was launched by IDBI 1976 with the same objective, similar objective, encouraging the technologies and the professionals to promote the new industries. So what you have to remember, Risk Capital Foundation founded by IFSC, Seed Capital Scheme founded by IDBI. What is the year for your Risk Capital Foundation? 1975, and Seed Capital Scheme 1976. Next comes various VCS, venture capital schemes. So venture capital funding obtained official patronage with the announcement of the central government of the technology policy statement in 1983. You will find that the institutionalized framework which started from 72, it was ultimately culminated by the involvement of central government, and it was announced in 1983. And what does this particular guideline stated? The policy statement stated that the guidelines for achieving the technological self-reliance through commercialization and exploitation of the technologies. You must remember that the technologies which are existing right now in our country, you must start working on those, because upgradation is required if you want to sustain these technologies in your country. Then ICICI Limited set up the venture capital scheme in 1986. That time ICICI was what? Development financial institution. Now so it is a bank, full-fledged bank. 86 to encourage new technocrats in private sector to enter into the fields of high technology with inherent high risk. High risk is there, and they are encouraging the ICICI via the venture capital scheme. They were encouraging the technocrats of the private sector to enter such field. The scheme aimed at allocating the funds for providing assistance in the form of your venture capital to economic activities having risk but also high profit potential. The potential of profit will be weighed in when we talk about the risk appetite as well. Next comes PACT. Now from here you can expect 0.5 marker, because this is what? PACT is just an abbreviation. You must remember the full form of the same. So full form based questions IIBF keep on asking in IFS. So 0.5 marker, yes, you can expect. So again, PACT, ICICI was the only you can say DFI which undertook the administration of program for application of commercial technology. So you need to develop some updation for the commercial technology, and this PACT was aided by the US aid. US aid was behind this PACT along with ICICI with an initial grant of $10 million. You want to institutionalize the commercial technology in our country, and the grant was given by the US government, the US private firm, ultimately providing $10 million. The program aims at financing the specific needs of your corporate sector, industrial units along the lines of venture capital funding. So that is the reason why I was telling you that in India you will not find that direct mention is there for some venture capital scheme. No, there will be a replica of your venture capital funding, but ultimately we are not that familiar as a country with the concept of VCF. So here what is happening? You are providing the funding to the corporate sector only, but we have not tagged this particular setup as the venture capital funding. Okay. Then comes the government fund. So IDBI was the nodal agency here. It administered the venture capital fund created by the Government of India with effect from 1st April 1986. Now government can also sponsor certain projects. The government started imposing a research and development R&D levy on all the payments made for the purchase of the technology from abroad, including royalty payments also, the lump sum payments for foreign collaboration. Also the payment for designs, drawings under the R&D Cess Act 1986. The levy was used as a source of funding the VCF. So in order to promote the domestic manufacturing, in order to produce the technologies domestically, the government started levying some cess on those projects which are not funded in India, but they are being utilized by the foreign country. So when we talk about such projects, whenever you are purchasing the technology from abroad, fine, all the payments you are making as an Indian company for purchasing some technology from abroad, you have to pay what? R&D levy. There will be a cess, R&D cess on those particular transactions, and once the cess will be accumulated, the government will utilize it as a capital fund for funding the new startups. Next is TDICI. Again, ICICI sponsored company. You will find that ICICI is more or less a pioneer in the venture capital field of our country. So 1988, the ICICI company, that is TDIC, Technology Development and Information Company of India, it was founded, and the venture capital operations of ICICI were taken over with effect from 1st July 1988. So very important point when you talk about the TDICI. Next is your RCF, again sponsored by the IFSC. Fine. So this capital foundation sponsored by IFSC was converted into your Risk Capital and Technology Finance Corporation Limited, RCTFC. So why the erstwhile funds were renamed, or for that matter revamped altogether? Because of this, because of the announcement made by the central government in 1983. So you will find that the RCF sponsored by IFS was converted into Risk Capital and Technology Finance Corporation, that is RCTFC, in 1988. It took over all the activities of RCF in addition to the management of other financing, technology development schemes and the venture capital funds. In all the schemes, whatever you are running, whatever the IFS was running, that was took over by the RCTFC. So these full forms are very important. You will get confused in the examination if you only know the abbreviation. That's the reason you must remember all these full forms. Venture capital financing, when you talk about the volume of venture capital finance in our country right now, so it has come a long way since it was first started in our country. Indian startup ecosystem has gotten a total of 17.2 billion investment from the venture capital firms, a big number indeed. Okay, 17.2 billion US dollar, a very important number. They can ask in the venture capital chapter also. According to the Indian Private Equity and your Venture Capital Association, IVCA, and the Venture Intelligence, VI, the investment received during your time period overall, when it started institutionalized in 80s, it is much higher than US dollar 13 billion. So overall, when you talk about in the recent past, it has been 13 billion, in fact more than 13 billion only. Right. So you will find that some data points here and there are important, the most important being 17.2 billion USD. Now comes the characteristics. What all characteristics are there for a venture capital finance? Whenever there is a scheme, or for that matter a new route is there for funding, you must know the characteristics of the same, and all these characteristics we will be learning in our paid classes. Right now the JAIIB registrations, they are again ongoing. They have been extended now till your 28th of Feb. So if you were unable to register for the JAIIB examination earlier, now is the time when you can have the JAIIB registrations done, and after that move on to your preparation. And in order to prepare well, you need a structured course, and for that we have the Mahapack, JAIIB Mahapack 2.0. Right now flat 81% discount is ongoing on our Mahapack along with the 4x validity. So if you want to have more information about this batch, just call us on the number 0981 981 9247, and for maximum discounts you can use the discount code, that is Y1003. This is the discount code which you can utilize. Okay, so in case you have any doubt related to whatever we have studied in this lecture, feel free to ask me in the comment section. So that's it for today. We will see you in the next session. Till then, goodbye everybody. Take care.